right. This is the second part of the risk here today. Okay, we will look at the political, legal, and regulatory risk, where actually these are the risks that businesses face because of the regulatory environment they are currently operating. So some business might face strict regulatory requirements such as environmental regulation and safety requirement. Okay. Okay, so that is about the political. There are okay. There are four classification of uh, risk just now. It is a political, legal, okay, regulatory risk, and compliance risk. Okay. What is political risk? Okay, let us look at what is actually political risk. Okay, where the success and the growth of an organization actually depends on the stability of the political environment, okay, and the strength of the political institution in the country or countries where it is operating. Okay, so as we know, the our we look at our country political stability now. Okay, so I think we can see that it is not really stable, and we are now having difficulties and keep changing and so on. All right, and this political landscape can have a significant impact on the business. Okay, you yourself can uh, look at what happens around you. All right, it's really give impact on the businesses, okay, due to the political landscape, as a change in the government can bring about dramatic changes that affect their operation and the bottom line. Okay, so let's see, in some cases we look at the newly elected government may choose to nationalize all foreign businesses operating in the country, which can have far-reaching implication for those company. Okay, it happened, for example, in Malacca itself. Okay, when we change the CM, then the nature or the structure and the objective change, and even the date of celebrating the Malacca historical day also change to the new dates, just because we change the government, we change the leader in the country. All right, so this actually, even in a country with a stable political system, political change can occur. Even in a stable political system, also the political change can occur. So, and it can be significant. All right. Normally, the incoming or the new government will revamp all the existing policies, alright. Kita tengok kat Malaysia kan, kita ada sekarang ada Malaysia apa, Madani. Alright, so macam-macam. Tak sempat nak tahu yang sebelum ni apa. Okay, now we talk about this. Everything is about Madani. Not to comment on that, but this is to prove that actually when new government comes in, then the existing policies will be revamped, and will introduce the new policies that can either support or hinder the business growth and development. Okay, kita tak sempat lagi nak tukar, kita dah kena ubah yang lain. Okay, and actually it costs us a lot when you change the regulation. Okay, let's say from last time we have GST, and all the businessmen, businesswomen have to purchase something, the what we call software and so on related to the GST, and suddenly we stop from using the GST, and now again we go back. All right, so we keep changing that, and this will give impact to the business. All right, so we got no choice, we have to keep the close eyes on the political development and prepare to adapt quickly lah. All right, to adapt quickly on these political issues. Okay, to respond to any changes that may arise. Okay, so they have to prepare themselves. Okay, as a businessman, they got no choice. All right. So we look at this regulator regulatory risk. It's not risk from the possibility that regulation change, all right, or updates. This is different. Just now, because of the political, and it may change the regulation as well because they are the leaders, and this is related to the regulatory risk, which this type of risk arise from the changes of the regulation. All right, then it can maybe they update the regulation, and maybe this will affect the way of you do your business. All right. Okay, so this regulation will apply to the business in general or maybe specific to the industries. Okay, so sometimes you have to look at the law, the competition law, fair trade law, or anti-monopoly regulation, and it is important for businesses to be aware of this regulation and to keep up to date with the regulation. And why? Because you need to avoid your company from potential legal and financial risks. All right. So another one is the compliance risks. Okay, another type of risks that business will face. Okay, compliance risks is in whatever when you do business, whatever regulation you have to comply and you have to follow. All right. So for example, in order for you to handle the pollution, for example, the non-compliance with the regulation could potentially lead to harmful effect on the environment, public health. And it is important for companies to strictly abide by this regulation, so to make sure that the safety and well-being of individuals and the environment is being taken care. Okay, so in order for you to mitigate these risks, okay, it is important for the business to have measures in place to ensure compliance with law and regulation. All right, for example, you get a case for your test or your final exam. All right, so normally when you ask the question asks you about this regulatory or compliance, so do not forget uh, to give how you want to mitigate the risk. Look at the marks, okay? If we look at the marks, sometimes they do not mention about the mitigation technique, okay? How to mitigate the risk, but you have to give the mitigation technique, all right? In relation to the compliance risks. So in order for you to mitigate, you try to ensure the compliance with law regulation, where this is actually can be part of your internal control system. Have the regulation in your organization, and you need to what we call employ someone that can monitor and can update whatever happened in the organization. So you must have someone that always look at the this what we call compliance rate and so on. Okay, so we can be sued due to the pollution and safety hazard if we fail to comply with the environmental and safety regulation. Okay, so you have to, if you're being employed as a what we call a risk officer, then you have to take care of these things. All right, but it is interesting. Okay, just interesting. Okay, then we look at the legal risk. Okay, what is the legal risk here? It's actually litigation, related to litigation, and it is a significant concern for many organizations because you can be taken into legal action. Okay, so any risk, if you are not comply with the regulation, for example, then someone will take legal action on you. And most probably, if you do not abide with the rules and regulation by the government, of course, the government will take legal action on you. Okay, so due to what? Due to your negligence, non-compliance, third-party lawsuit, for example, right? For instance, if you look at the healthcare provider, such as hospital and the workers, they might be exposed to legal action for negligence. So that's why sometimes doctors also um, do something illegal. All right, maybe you due to some certain reason lah, bukan dia suka-suka nak buat kan. So maybe because of something happen to their family and they maybe need something, okay, so they happen to be get involved with the unethical activities, okay, so they can be taken into the legal action for their negligence, okay, so resulting in harms to the patient, for example, okay. And if we look at the tobacco companies, which have faced legal action for compensation for cancer victims due to the alleged harmful effect of smoking. All right. So maybe that one, the company that manufactures or provide food and drinks, they might need to be aware of the potential of litigation from customer that claiming a particular product has damaged their health condition. Okay, so that's why some company, a big company, normally would purchase this what we call product liability insurance. Product liability. All right. So if anything happen to their customers related, okay, to their product, then they will get a certain what we call return lah from the company. All right. So such claim actually can impact the company, can impact the company reputation, and the cost of loss would also quite costly. So in order for you to minimize all this, you have to take the proactive step to mitigate the legal risk to avoid the potential of legal action. So how you need to make sure that you comply with all the regulation just now, right? So that is legal risks. And a business risks here, okay, you have strategic risks, product risk, commodity, product reputation, operational risks, and contractual uh, inadequacy risks. Okay, let us look at this business strategic risk first. Okay, okay, strategic risk. What is actually strategic risk? Risk that should be identified and assessed at the highest level of the organization, where the senior managers or senior management team and the board of director need to look at this. All right, and the reason why for this that strategic risk have the what we call potential significantly impact the long-term mission and vision of the business. All right, so therefore the top management need to look at it. All right, so it is a common for a company that are looking to expand their operation to consider either organic grow or grow through acquisition. All right. So, however, in the later option can be more risky. All right. So, if you want to choose the acquisition, it is a bit risky due to the involvement with other parties. Okay, you have learned about the acquisition last semester. All right. So, when the difficulties in the uh, collaboration or joint venture or even the acquisition, okay, to work together with other party, a new parties that just involved with you, then it is quite difficult and may have a greater impact on the business vision and mission as well. Um, the example here given about the COVID-19, okay, where actually reshaping the nature of work for most businesses, with the widespread of adoption of work from home policies. It has become, I think, even vital for organization to have proper mechanism in place to ensure that they can sustain their mission while adding value to the business. Okay, so we look at the product risk here. Okay, product risk, we have a few uh, point here. Product risk refer to actually the probability that business may face low demand for its product or services due to strong competition, okay, or due to market trend, changing customer preferences, all right. And this type of risk may arise when a company introduce new product or new services, or when there are changes in existing product or service offering. So this product risk can have a significant impact on business revenue and the profitability, right? So it is actually important for the company to analyze and manage these risks to ensure sustained growth and success. Okay, so we have to do something, right? When you want to introduce a product, new product, for example, okay, and look back why your product now the sales is keep declining and so on. All right. So when look at this, the launch of a new product, for example, into the market can be a risky. All right. Okay, maybe despite of extensive research and preparation, the product might not achieve this expected volume of sale. Right. Why? Maybe the initial sales are promising and the projection of customers' purchase might not be met, leading to a shortfall in revenue and profitability. So this actually can due to various reasons, such as maybe your marketing strategies is not effective enough. Okay, maybe lack of consumer interest or unexpected competition from the similar product, right? So where this company actually, what you need to do, you have to reassess your approach and maybe you can strategize accordingly to ensure the long-term success, right? So that is actually risk that actually associated with the product uh, can have significant financial, legal, or maybe reputational risk. All right. Uh, they can link to the financial risk. They can link to the legal, reputational risk. And to mitigate this risk, the management typically conduct market and feasibility studies. Right. And this market studies actually aim at understanding the demand of the product. Okay, identify the potential customers, evaluating the competition. That is actually market studies. When come to the feasibility studies, it is related to the technical, financial, operational, and the viability of the product. Right. So you have to run these two, where one feasibility is considered the internal and your market studies is the external situation. All right, and this actually help you to make a decision, to take necessary action where to minimize the impact of the product risk. Okay, if you look at the 3G nowadays, 3G mobile communication services has been slower than anticipated, right? Okay, due to these several factors. So we know that now we are looking at 4 and 5Gs, all right? So the technology used by 3G technologies, okay, is no longer, I think, enough for us nowadays, all right? So you want a faster to transfer the data, the rate, improve the voice and quality, advanced features, for example. All right, so that's why you now switch to a 5Gs, mobile communication. That is one of the product risks that we face in the market. Okay, so we look at the commodity price rates. Okay, bersabar ya sikit lagi. Okay, um, commodity price risks. Many business are actually vulnerable to risks arising from unforeseen price fluctuation, the price volatility, where this could actually damage your input costs. Okay, when the price change, when it increase, then it will damage your input cost. Okay, supply chain and again your overall profitability. If the price of oil suddenly goes up, and it could adversely impact the airline, logistic company, okay, and other industry that rely heavily on the fuel. Okay, you may use this point when you want to discuss about the risk in your first case. Okay, in the first part where we look at the distract company, right? Okay, so it is related. For example, the company is doing the logistic services, right? Okay, so it relates to the, if the price of oil is fluctuate, okay, and if it just goes up, what happened? Okay, so if the price of weight of corn, for example, increase uh, significantly, for example, it could lead to higher food price, which could hurt the bottom line of restaurant, supermarket, and food manufacturers. Right, and if it is sorry, the organization have to look at this and do something to the this mitigate this, right? To make sure that the commodity price, which is I think it's uncontrollable, but you can minimize it, all right, from impacting your company very much. Okay, so that's why the officer or the person in charge have to do something. Do not maybe do not rely heavily on the commodities. Maybe you have to think back. Okay, and when the supplier, for example, the supplier maybe will uh, give you a huge impact, all right, due to the fluctuating prices in the commodity market. Okay, this also will give you will impact your business, all right. Okay, if we look at this, another problem is the or risks due to the commodities. Why? Because of the global supply, economic recession. All right, COVID-19 the other day. Okay, again it touched the commodity price, okay, the natural disaster and the geopolitical event. All right, so that's all that will give impact to the commodities, and again will impact your business. The business that will deal with these such commodities needs to be vigilant and adapt the strategy to mitigate the risk. Okay, be prepared. Okay, when the any unexpected event happen, then you have to do how to overcome this problem, right? So you have to think it earlier. Okay, so that is the commodity. Okay, product reputation is where we can look here is some company rely heavily on the brand image and the product reputation. All right, so if anything happen, we can look at this Starbucks, for example. Okay, when something happen in Gaza there, okay, so the company is being affected. Okay, even if we touch about the halal certification as certification in Malaysia. All right, and also again it will touch on the product reputation, right? So if you really rely on your brand image and product reputation, so any bad news or adverse event in the market, okay, will give impact to your sales, will give impact to your sales. And if you look to the risks to a product reputation could arise from adverse public attitude to a product or from adverse publicity. A single mistake that you do also will give a big impact. Okay, so this is due to the product repetition. Okay, so a lot of for example the in Malaysia we can look at the event where related to the non-halal ingredient used in gardenia, funding terrorist organization, you boycott McDonald, you even boycott everything, every what we call uh, this product, all right, the branded product which is you think I'm not so sure how you know about all this and how this is this when we talk about this Gaza, Israel sponsored all that, the sources of the information, whether it is true or not, I am not so sure. Okay, so they actually that is another story lah, all right, so when we look at the product repetition here, even the laptop itself, okay, it is actually uh, let's say you are using the HP, okay, it is related to the Israel product. So we don't know that how true it is, okay. And okay, we look at these risks from changes in customers perception about the quality of the product. All right, you love to try new things, okay, and you will compare between the names or branded product and with the new one, okay, and you will have a new perceptions about the quality of the product. And when it comes to a better price and slightly lower or cheaper, then you will start to make a comparison. All right, then you will touch on the reputation of the product. And sometimes now, whatever mistake that you do, or whatever comment that you post in the social media will give impact to product reputation. Okay, if the company did not address the what we call product reputation properly, then it might shift the customers' loyalty to the business competitors. Okay, a single mistake you need to respond fast. All right, in order for you to make sure that your reputation is not going to be tarnished by other. Sometimes your market, the other market player, the one that do something and ask people to give a negative comment on the website and so on, in order for them to gain the advantage from your weaknesses, or your product reputation. All right, so for example here, if you look at this car manufacturer announced that it is recalling all new model for a car to rectify design defect, airbag, seatbelt specification, and the product reputation and its features here might be affected. If it is keep happening, all right, once once a while is okay. All right, we can accept it. But if the this accident keep what we call incident keep happening, and you keep calling a new car to come back and to do this what we call to do the what we call repairing, change the airbag and so on, then your sales in future will be affected. Eh? All right, so that is when come to the product reputation. Okay, and we look at this operational risk. Okay, it is a significant aspect of any business should take into account, where it is actually refer to the losses that may arise due to inadequate or failed internal processes, fail due to the people or system, okay, external event that can disrupt the flow of business operation. All right, the broad concept that cover various risks such as risk of fraud, employee malfeasance, failure in the internal control system, and other related risks, which impact the operational risks, which impact the operation of the organization. All right, and it is quite difficult for you to manage this. Okay, uh, where if it is not managed what we call widely, okay, the operation might face a significant losses. All right, and may give impact to this organization. All right, then it will impact your financial position. Hmm? All right. So, for example, as we know that this what we call COVID-19. During the COVID-19, the businesses worldwide experienced major interaction with the introduction of regulation and mandatory restriction on movement. Okay, that is where it is seriously impacted the company last time. All right. So at that time, many company cannot run their business, all right, to continue the operation, where the overhead is already high and the operational cost to pay the labor, for example, okay, cannot be covered by the anything, cannot be covered by anything. Okay, you have the employer in the organization because you cannot terminate them. However, you don't have the any production, right? Okay, so that is the consider the operational risk. Okay, and We look at the contractual inadequacy risks here, the risks that might arise when the business has negotiated contract. Okay. Okay. And the business transaction without proper consideration of the possible outcome in case things that do not go according to the existing plan. So this actually can happen due to unforeseen or changes in the market condition, okay, and maybe due to business being unstable or unable to fulfill obligation or meet targets. All right, so the business might face legal and financial implication. All right, so loss of reputation again, damage the relationship with the stakeholder. All right, because you cannot fulfill the contractual content, whatever in the agreement. All right, so therefore you have to face the lawsuit, for example. Okay, then you start to have bad relationship with the stakeholder. So this is actually what you need to do is to have the conduct thorough risk assessment and contingency planning to mitigate the such risks and ensure their long-term sustainability. Okay, you need to do something, all right. So in order for you to minimize the risk associated with the transaction or contract, so better to have a clear terms and condition outlined in the contract itself, right? So you need to have an agreement with the other party, all right, which involved in the transaction, all right, to have a clear understanding of the right and your right and his right, okay, and the obligation for both parties before you sign the contract. Okay, look at the terms and condition in the contract, where so this will avoid the hassle uh, if anything happen. All right. Okay. You can even actually include a clause that grants them the right to make claim in case of unfavorable circumstances. Okay, so let's say if the other parties fail to honor the terms of the contract, then you can exercise the right and take necessary legal action. Okay, this clause actually can be used as a safeguard, all right, for the company, and this can ensure that you or they can protect their interest in the case of any breach of contract. Okay, so for example in a construction industry, okay, a common for building companies to have strict deadline for the completion of the project, because if you delay 1 or 2 days then you have to pay for the fine, all right, to the government actually, all right. So if a building or house is cost you a lot already and you have to pay for the penalty charges, all right, it will increase your what we call cost of building to build the building, so you may charge the compensation to the maybe to the buyer or for any losses incurred due to the delay. Okay, you may discuss with the contractor, for example, okay, in order for you to who is going to pay for the penalties, okay, because not you delay uh, the construction work, okay, but maybe due to the COVID, for example, the COVID-19 last time, okay, so a lot of contract cannot be uh, completed uh, during the uh, cannot be completed, okay, uh, when this time come, so the company have to pay the penalties. But at that time we asked one of the contractor during the research, they have this what we call uh, not the compensation, but the contractor get the permission from the government, okay, because that is not their mistake not to continue their production, their construction work, okay. So that's actually help them a lot when the government get involved in the negotiation at that time. during the COVID-19. Okay, so like we look at the economic risk here, where economic risk actually uh, related to this inflation. Okay, uh, inflation. Okay, all right, and then it is actually refer to the potential danger or uncertainty that a business may face due to changes in the overall economic, financial or market condition. And these changes may include fluctuation in the stock market, changes in interest rate, all right, shift in consumer demand, changes in government policies and interest, a lot of things that related to that. Okay, and the economic landscape, for example, is constantly evolve and can be influenced by a variety of factors. Uh, Factors such again the inflation, unemployment rate, international rate relation, fiscal policy, okay, that is made by the government. All right, so the inflation is actually um, consider high during COVID, and after that, right until now, the inflation rate is quite high, all right, compared to before, all right, and that is really give us uh, big impact, all right, also to the business, all right, the economics risk. Okay, this risk is actually as a risk for the business which is uncontrollable. And again, this example of the risk is changes in population in the country, where sometimes the citizens migrating to other country, all right, so resulted in changes on target market population. Okay, or high inflation rate due to economic instability. Okay, and another one is the where the government might impose control, right? Might impose control on this price mechanism. Okay, where we know that we have practice the price control in Malaysia. Okay, for certain product. Okay, where is the ceiling price and the lowest price, which can actually impact the users of the product. Okay, and this actually will give impact to the profit of the business as well in the long run. Okay, so you may discuss the economic risks, okay, in the situation where um, to talk about the unemployment rates nowadays, right? We have, I'm not so sure about the percentage now, but I think it's getting higher in terms of the unemployment rates. Okay, however, our graduates is, I think, achieve, UiTM achieve a quite high employment rates. Okay, after graduating 6 months. Okay, especially our accounting student. Okay, so no worry about that. Inshallah, then you will have, uh, you will get a job later, right? Even the inflation or the unemployment rate is keep increasing. Okay, so that is basically on the economic, and you may look at the case study, the credit crunch, US subprime mortgage. Okay, in 2008. Okay, so you may download the material. Okay, now we look at this financial risks. Okay, financial risks here is where risks of a change in the financial condition. For example, exchange rate, interest rate, credit rating of customers, or changes in the price of goods. And this risk actually related to possibility of changes in financial conditions and circumstances. So we look at the five types of financial risks. We have these credit risks, okay, uh, credit risks, political risks, currency risks, interest rate risks, and gearing risks. So we look at one by one. Okay, so what is credit risks? This is actually one of the type of financial risk arises from possibility of losses due to non-payment by debtors. All right. So that is credit risk. And non-payment by debtors. it is actually a potential for you to face a losses, okay, right, due to the failure of another party to perform according to the terms of contract. All right, so uh, one form of credit risk is debt leverage risk, okay, where refer to the risk that an entity may default on interest payment and the repayment of principal due to an increase in size of their debts as a portion of their capital structure. Right, and how you want to mitigate this? Actually, you can conduct a preliminary assessment of potential debtors or customers. All right, and this actually assessment help you to identify and where you can use this information to evaluate the creditworthiness of the debtors and try to determine the likelihood of them to meet their financial obligation. All right, so just like when you want to apply a loan from a bank, all right, you need to submit a few things that required by them, and they will make the assessment, okay, whether you can pay or not. So the company can do that, okay. We try to get the supporting document, okay. Any what we call, sometime when we deal with the company, we can ask them to provide us what we call the supporting documents, such as not the bank statement, but maybe they want to purchase a high volume of your product, okay, then you can request the bank guarantee from them, okay. That is how you can maybe minimize the risk. Once you have that, then you can proceed with the supplying this product to your clients, okay. And you may limit this what we call credit to the potential customers, okay. So let's say you just get to know them, then try to give lower credit limit, okay. Once you familiar with the company, okay, and you already look at the previous payment, okay, the track record of the organization, then only you will allow them to have more or increase their credit limits, all right. Okay, so that is basically on this credit risk. We look at the currency risk. Okay, currency risk here is also known as a foreign exchange rates, where it is a financial risk that arises due to the changes in foreign exchange. All right, risk that the value of financial instrument will fluctuate due to changes in exchange rate. Okay, you learn about your part. Okay, so this is the example given to you is related to the International Accounting Standard 32, where define the currency risk as a risk that affect the financial statement of an entity. So you make adjustment, okay, when it comes to this currency risk, okay. And two subcategories of currency, where you can look at the translation or current conversion exposure and currency transaction exposure. All right. So what else you have here? Where the translation or currency conversion is the susceptibility of the financial exchange, where it affects the foreign exchange rates changes. All right. When come to the currency's transaction exposure, it is an entity to the effect of foreign exchange rate during the transaction cycle associated with the export or import goods or services. Okay, because sometimes you supply product or you export your product, okay. So this happen during the transaction, right, the purchase, and your when you receive the product is not the same anymore. Okay, so that is this currency. And we look at the interest rate here. It is actually entity that borrows or invest fund to earn interest. Okay, refer to the potential or unexpected gain or losses due to the changes in the interest rate that can impact this what we call financial health of the organization. And suddenly, okay, during the COVID, after that, then the interest rate keep increasing now. Okay, and you cannot purchase anything. Okay, for example, if you want to purchase the house, the rate is so high now, and the interest rate is so high. Okay, so just maybe the business also want to make a loan, all right, so to expand their business, to invest more. So that will give impact to the organization because the price, the rate of interest is now increasing. Okay, so in order for you to mitigate the risks associated with the interest rate, the fluctuation of the interest rate, so maybe you can use the strategies. Okay, so hopefully you still remember about the hedging strategies that you have learned in your financial management before. All right. Okay, we look at the gearing here, gearing risk, ring. Okay, it is actually a liquidity risk, okay, type of financial risk that arises when a company has high level of financial gearing, a large amount of borrowing, and the risk is related to the company ability to meet the financial obligation in a timely manner. All right, where this is related to your debt obligation actually. All right, where the business liquidity the business liquidity actually is related to the funding of cash flow risk. This is where the risks that company will try to counter the difficulty in realizing asset or raising fund to meet commitment associated with the financial instrument. So you have to do something in order for you to pay back, to pay back your loan and so on. Okay, maybe you have the debt is time that you need to pay. All right, then you will have a problem in meeting the this obligation. All right, due to what? Maybe because of the economic downturn, maybe due to the increased competition. All right, and maybe you don't have enough cash because changes in the customer demand will impact your sales. All right, and this your product cannot be sell. Okay, and then you cannot collect any money and so on. All right, so in order for you to mitigate these gearing risks, you need to evaluate the financial statement to assess your financial performance over time and identify any potential risks that can impact your liquidity position. Right. So look at your maybe debt to equity ratios, look at your cash flow projection and other financial metrics to determine the risks that you are at now. All right, so maybe you cannot pay your debt, so you have to do something. All right, so we have learned in financial management how to minimize or to reduce our this what we call um, debt, or how to control our debt and so on. All right, so if you really rely on too high, you have a loan is good for you, but if it is too high, you may face bankruptcy if you're unable to make this to pay back your principal or interest on time. Okay, so this is important for you to look at, where if you want to make sure that the company is going to sustain, so balance your debt and your equity financing. Maybe let's say a 50% is considered fine with the debt ratio, for the debt ratio. Okay, so if more than that is too high, if it is high then 55%, then that is not a good position for the company. Okay, so you have to do something, look at the financial statement, do something in order for you to run the to check on the situation of the organization. All right, I think we have come to the end of the lecture. All right, let me stop the recording.